Hello and welcome to this session in which we will discuss Chapter 7 and Chapter 11, Voluntary Bankruptcy. Now it's very important to just know what's Chapter 7 Bankruptcy and what's Chapter 11. Chapter 7 is liquidation. Who can file Chapter 7? Individuals as well as businesses. And under businesses, we could have corporation and partnership. And you're liquidating, you're going out of business if you're a business. Chapter 11, usually it's for businesses, and it's a reorg. You're not going out of business. What you're doing is you are renegotiating the loan terms with the creditors so you can survive. So Chapter 7 and Chapter 11 voluntary bankruptcy cases offer a way for debtors, including individuals and businesses, to seek relief from their debt. So they're trying. The debtor is saying, I can no longer pay. I need a relief. Therefore, I'm going to file for Chapter 7 or Chapter 11. So the debtor themselves, they are voluntarily going into bankruptcy. We will be discussing certain aspects of Chapter 7 and Chapter 11 initiation of these voluntary bankruptcy. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com. Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today. Once the individual file, they get what's called order for relief. It's automatically triggered, allowing the case to proceed without further court intervention, unless the court obviously decides otherwise. What does that mean? Order of relief is the starting date of the bankruptcy case. Usually when you voluntarily file, this is considered the starting point of the bankruptcy case. You are also granted what's called the automatic stay. The automatic stay in bankruptcy is a protection that immediately takes effect upon filing a bankruptcy petition. You file, you'll have an automatic stay. How is that going to help? Well, it's going to stop creditors from coming after you, like with lawsuits and wage garnishment, but does not apply to criminal cases. If there's a criminal case against you, that has nothing to do with this automatic stay, or a paternity suit, spousal child support matters, those continue normally because those are in family court and the criminal cases are in the criminal court. Who can apply for Chapter 7? Who's eligible to apply? Only those residing in the US. Remember, individual, partnership, and corporation. Chapter 7 means what? Means you are liquidating your asset. You're selling your assets to pay off your debt. It means you're going out of business. Therefore, the government don't want certain entities to go out of business, and you need to know what these entities are. Railroads, savings institution, insurance companies, banks, and small investment companies. Now, you can try to create a mnemonic to remember those, but here's what I'm going to tell you. Think about those four: savings, insurance, banks, and investment companies. Those are finance-related companies, money-related. Think about it. When you have an insurance policy, you don't want the insurance company to go out of business because you bought this insurance for protection. If you have money in a savings account, in a bank, in an investment, they want those institutions to stay in business. That's why they cannot go into Chapter 7. Also, railroads are critical for the infrastructure. Therefore, they don't want them to go out of business. That's why they cannot file for Chapter 7. However, for Chapter 11 reorg, most entities under Chapter 7, they could also file under Chapter 11, including railroads. However, except stockholders and commodity brokers, they cannot do Chapter 11. But railroads, they can go with Chapter 11, but not Chapter 7. So Chapter 7 is mainly for businesses. It can be used for individual, but usually for businesses. Chapter 11 and Chapter 7, how does this whole process start? Well, you'd have a voluntary, somebody going to the court or hiring a lawyer to petition, say, I would like to file for a bankruptcy. So it's a voluntary case under Chapter 7. It's a formal request to declare bankruptcy and to start the process of resolving debt under the protection of bankruptcy law. You don't want creditors to be coming after you. You don't want them to be garnishing your wages. You just, let's go to the court. Let's get done with this. We'll file for a bankruptcy. Now you have to understand a few things about bankruptcy, which is there's misunderstanding about them, especially on the CPA exam. No requirement to be insolvent. A debtor does not need to be insolvent. Insolvent is you only have more liabilities than assets. All what you have to show is you are unable to pay your debt when they come due. That's all what you need to show. I cannot pay off my debt. You don't need to be insolvent to file for bankruptcy. This means that if the debtor has assets and income, they could still file for bankruptcy. All what they have to show is I can't pay off my debt as they come due. There's an income test. If the debtor's income is too high, they also cannot file for Chapter 7. Now, what's too high, we're going to see in a moment. And why do they have this? This is determined by specific income test designed to assess whether the debtor has enough income to pay off their debt without the need for liquidation. They want to see if you could pay off your debt. Otherwise, they will dismiss your case because you have too much income. Now, so the case could be dismissed, or they could ask you to convert it into a Chapter 13 case where they'll give you more time to reorg and pay your debt over 5 years. But if Chapter 7 is considered abuse, why would it be considered abuse? Because the person that borrowed all this money and spent it, they can pay it off, but they choose not to. Therefore, it's not fair for the creditor. Therefore, the court will reject your case. This is usually considered if the debtor has sufficient income to pay off the debt. Now, how do they determine whether you have a sufficient income or not? If the debtor's income and their spouse, their monthly income is greater than the state median for a family of similar size, let's assume we have husband, spouse, and 3 kids. Well, and the state will issue those numbers. For a family like this, the median income in that state is $90,000. Well, if you make more than $90,000, the case could be subject to dismissal. Not necessarily, but it could be subject to dismissal. Now, if it's less, then you can go into Chapter 7. If it's more, it could be subject to dismissal. Here's what's going to happen. If it's more, the court or some creditors, they can file a motion to dismiss Chapter 7 case. This could be based on the means test or the general assessment of abuse due to the debtor's ability to pay debt. They would say, no, the debtor can't afford to do this, can't afford to pay off. And we'll go into this means test. What's the means test for Chapter 7? How do they compute this? They would look at your gross monthly income minus subtract allowable necessary expenses. Now, what are those necessary expenses? Each individual will have their own necessary expenses. Rent is a necessary expense. Food, clothing, medical equipment, medical supplies. They will take your monthly income minus those expenses and they multiply it by 60 months, which is over 5-year period. And they would look at the outcome. If that formula is less than a certain number, it happens to be 9,075, this number could change. Then they would let you stay in Chapter 7. They cannot dismiss it because you're making it small. You're going to have a little bit of discretionary income over 5 years. If this amount happens to be $15,150 or more, there's a presumption of abuse, and the debtor must convert to Chapter 13, and the case for Chapter 7 is dismissed. Now, if you're saying what's in between, this is where the court and the lawyers will play a role. So what are the necessary expenses? Living expenses, taxes, involuntary deduction, healthcare equipment. Sometimes the individual might have certain healthcare needs that others don't. This will be considered necessary. Let's take a look to illustrate the means test, just to kind of make sure we are comfortable with it. In the real world, it's more complicated, but we just have to simplify it. Let's assume John is attempting to file for Chapter 7, liquidation. To assess his eligibility, the means test is applied. And let's assume John's monthly income is $30,000 and his expenses are $2,500. Well, it means every month he'll have $500 of discretionary income. We'll take this $500 over 60 months, $30,000. $30,000 is above $15,150, above the threshold. What does it suggest? It suggests that John has sufficient income to pay off the debt. Therefore, Chapter 7 most likely will be rejected. It's a form of abuse, and they will either ask them to do Chapter 13 or dismiss the case altogether. Joint filing for spouses is allowed. Spouses have the option to file for bankruptcy together. This approach will be beneficial for them to avoid fees, but what they do under those circumstances, they will combine their assets, they will combine their debt. It's same thing times 2. Now, when you file for a voluntary bankruptcy, what do you have to do? Well, you have to be nice, right? But what do you have to do? You must submit certain documents and certain information. And this would include what? Obviously, it's going to include your finances. First, a list of all your creditors along their addresses. And you want to make sure you list all of them, because if you don't list some of them, you're going to see later, it will come back and bite you. Detailed schedule outlining the debtor's asset and liabilities, all your assets and all your liabilities. Usually you want to show them at fair market or at selling or liquidating value, because that's the most relevant valuation for them. A current statement of your income and expenditure. How much are you making now? What are your expenditure? A thorough statement of your financial affairs. If you have any savings account, brokerage account, any type of financially related document, you have to submit this. Copies of the pay stubs received within 60 days before filing. Are you working? Show us how much you are making. Give us the pay stub. And you want to show also the tax return for last year. Also, if you have any unpaid taxes, you have to pay them first. Must be settled before bankruptcy can continue. Now, if you don't do so within 45 days, it's crucial to adhere to those rules. Your case will be automatically dismissed. On the 46th day, you're back to square one. You would lose, the order for relief, the automatic stay, and all that. This highlights the importance of being timely when it comes to bankruptcy. Let's take a look at this multiple choice questions from farhatlectures.com. Which of the following is not stopped by the automatic stay in bankruptcy? Remember, the automatic stay is important. You're looking for it. But what it does not stop? It stopped certain actions against you. What it does not stop? Does it stop debt collection calls? Yes, that's why most likely you went through Chapter 7, because you want to stop those debt collection calls. Wage garnishment lawsuit. Yes, it does stop that. Does it stop criminal prosecution? No, if you have a criminal case, it will keep going. Demand for payment. Yes, it will stop demand for payment, because the debt collection is the demand for payment. Basically, what you're telling your creditors, look, I can no longer pay. Let's go to court and settle this. Stop calling me. So it does not stop prosecution, criminal prosecution. It does not stop family-related issues like child support, alimony, spousal suit. It doesn't stop those. What should you do now? You want to go to Farhat Lectures, look at additional MCQs. That's going to help you if you're studying for your CPA exam or taking a business law course to understand this material better. Good luck, study hard, invest in yourself, and stay safe.